And welcome to another episode of Daily Market Mastery with me, Rauchenwald, on this mediocre Wednesday. I hope you all had a great week so far. As always, before we jump into it, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And besides that, all the tools that I'm using, where's the overlay? All the tools that I'm using, so the broker, charting software, strategy I'm following, and so on, are all linked in the description down below. And the one thing I always recommend, if you haven't done so, is to check out the Elliott Wave principle, which you can read online for free when you use the link in the description down below, or you can get yourself a physical copy of the book, which I, as said, highly recommend. With that out of the way, let's jump into it and start our day as usual with, let's get rid of that, with by taking a look at GameStop. We're still in the same slightly upward sideways movement, and nothing's changed from the last couple of episodes here, so I'm still expecting potentially another push down into the area here. Doesn't have to happen. It's possible that the correction is over here, already finished here, and we're in the next 1, 2, 3, 4, 5 impulsive pattern upwards. But I still right now consider the possibility that we'll get another push down here to finish a 1, 2, 3, 4, 5 pattern. The longer this drags out, the less likely it becomes. But that's still something to keep in mind. Now, personally, right now with GameStop, we have our 500 shares here in this portfolio. Plus, against those, we sold $30 calls that expire on Friday. So I already have the order in place to buy them back for $1 each. I mean, it's really like a mediocre week, or actually really, yeah, like, in quotes, bad week in terms of option premium. But we'll see if, it's still at the end of the day, or at the end of the week, it's still $25 better than nothing for just holding the shares. And that's that with GameStop. Now, yesterday we talked about, not only yesterday, but on Monday as well, we talked about, among other things, NVIDIA. NVIDIA actually shot on first glance through the 2618 extension level. That we expected as the potential turnaround point for wave 1, 2, and then wave 3, which gives us now two options. Either we immediately, pretty much in 2 minutes when the market open, dip below that, and I would still qualify it as a bounce at the 2618, or we may briefly dip below that and then continue our journey, which would then make the 382 extension level the next potential profit target for long positions, to finish up this 1, 2, 3, 4, and then 5, which becomes the 1, 2, 3, 4, 5. Now, as I mentioned in an episode, I think last week we talked about it on Thursday, if I'm not mistaken. I don't know how it's possible that it goes further, but the pattern says it goes further. So, again, make your own decision, but right now, that seems to be what's happening here. Now, it looks like you don't see it, but on the other screen, my order to buy back my Faraday future calls triggered. So we had the January 17th, 25 calls that we sold. So we're going to look into that real quick, that we sold for a couple of dollars, and cannot go much further here. Wait 1 second, GameStop, Faraday futures, there we go. So we had the January 17th, 25 calls. Those here, there we don't even see, strikes might be hidden, strikes, show all. That we just bought back. Okay, market's not officially open. No, it should be open, so we don't have any volume here, interesting. So, and here also no volume, so no delta, no nothing. Okay, something seems to be off here. But yeah, so we got those back and basically locked in a couple dollars profit on our Faraday futures options actually. So we just collected the premium and bought them back for $1, which means the shares will not get called away no matter what happens till then. We're gonna look later if we get more data on the option chain here to see if we can write some long-term, so Leaps call options here. Hi Olga, great to have you here. Yeah, anyway, just saw that notification that the order triggered. Now, yeah, what's next on our list? So NVIDIA, I said, I think we were somewhere down here, so slightly past the 116 mark when we covered it the last time and actually considered the next target here. Now market's already open. It looks like we will not break below here on first glance, which means the next target I said would be 137 to 140. Then the same should also apply in SPY, where we are, no, there we're still on track. So we still are waiting in SPY to basically hit either the 2382 extension level or the 2681. Olga, how are you doing? So how's your week going? And in, where do we have the micro E-mini NASDAQ? Up. So there we actually gapped through the 161.8 extension over the weekend. And so same thing, next target would be 20,374 to 20,700 to finish a potential wave 1, 2, and wave 3. Then wave 4 and wave 5. So I'm fairly confident or reasonably confident that in the NASDAQ we'll actually see the 21,000 again, or not again, but for the first time, because here we barely didn't reach them or didn't reach it. So we see 20,983. That covers NASDAQ, SPY, and NVIDIA. What do you mean by slow? So like slow trading week, like no huge movements and so on, or yeah, like on my end, yeah, quite busy, but overall fine. Yeah, especially this week, I have to say, finally no lasting effects anymore from having my wisdom tooth removed last week. So that's kind of nice. Where do we have? No. Do we have any movement? I mean, price seems to be at 30 cents still, so still undecisive. Okay, so there we still will have to wait and see how that develops. I can actually zoom in a little bit, and a little bit is in that case a little bit more. Zoomed in like that, I actually expect, so even if I'm right that it will get another push down, that potentially either that has to be A, B, C finished, but more likely this is wave A, this is A, B, C for wave B, and now we get wave C. So potentially movement into the area of 49 cents 31. So which means I got out a little too early, so there was no need in that case then to close it at a loss. But yeah, before we then potentially continue the journey further downward. Let's zoom out again, but maybe like take 3 days. Do we still see enough? Yes, 3 days works. Yeah. Yeah, I still believe that here we'll get the push through. So like in my experience, like really every time I can recall when we broke through the 78.6 retracement level and got relatively close to the 100% retracement level, it just was a matter of time for it to actually push through. But I hope not for you. You have been in and out of a couple of stocks to build up a bit of cash. Ouch, but at least you got rid of them. Yeah. Thankfully, it was only one left. So I had the other 3 already moved like years earlier, but that one somehow was a leftover. So I'm luckier than my wife. She once a couple of years ago got all 4 of them removed on the same day. So yeah. Yeah, wisdom teeth, yeah. Yeah, so for your sake, I hope I'm wrong and that it goes up, but I still think that we'll first see the push down here. And GameStop we covered. What's Barnes & Noble? Same thing, slightly upwards. It's actually nice to watch. I mean, it's been like a decent development here since July. Obviously, in relation to the rest here, it doesn't look so much, or as if it would have been a big movement, but it's still like moving forward. Yeah, but still remains to be seen to really get a confirmation that there is indeed a 5-wave impulse pattern going on upwards, but it looks like it. Immersion still doing the same thing, so we covered that as well, so just have to wait and see. If we eventually get a substantial push here to confirm that wave 4 is finished here, and we are on our way to wave 5. And index, yeah, there we're getting close to the point where we might get confirmation. So if we break out through this from this so-called deceleration channel, trend line, whatever, then that might be the confirmation we need that we are indeed finished, that we have indeed finished wave 4 here, and that this will be the next wave 1, 2 of our wave 5 that should take us to 30 and at most to around $60 per share. So that's going to be interesting. No Labs will issue the product to the FDA or give guidance on the process by end of September. I'm really hoping they're done diluting for now. We'll add one last time when we go below 20. Yeah, let's put that on the screen as well. So as always, thanks for sharing. It's great that you keep up with all that. I don't know if I personally would add more. Like, I'm not sure what your average is. So that's obviously a huge aspect of the whole equation. But I mean, so like based on Elliott Wave Theory, this may be a 5-wave impulse, and then that might be a corrective pattern that's just drawn out very long. And now it is possible, as I mentioned earlier, that we finished here, and that's really just the one time or the first time. I mean, there's a first time for almost everything. Yeah, that corrective wave really retraces like 90-something%. And that we go up from here. But I mean, again, like, so really in every trade that I recall when I had or saw a pattern where, okay, this is 5 waves, now we get the correction. And every time it came this close to the 100% retracement level, it turned out I mislabeled something, and it actually then, yeah, depending on the time frame, of course, then eventually just broke through. Yeah. So, and then the bigger issue, however, is so that here we already have the 78.6 retracement where we now bounced in theory twice. And everything below that is kind of like, yeah, like, I mean, it could go well. Yeah, obviously, and you do you, it's your money, of course. But personally, I'm not sure if I would average down here further because because I obviously try to apply Elliott Wave Theory I try to do it in every decision I make, but I obviously don't actively do it in every decision I make. I mean, nobody's perfect. But in this case, it would just point towards, okay, there is the last, in quotes, common retracement level where we would turn around. And if we break through that, so if we go to 20 or below 20, then we get so close to the point where the whole pattern becomes invalid. And then I don't know. Like, so personally, I wouldn't add more. So I would wait. Yeah, I mean, well, anyway, that's a weekly chart. So if we talk about end of September, we're talking about 4 more candles. And if the earnings or guidance isn't good, they anyway break through the bottom here. But the question is just how far. But then I wouldn't add money. Like, I mean, it depends on how much and blah blah blah. My thesis is like, there's actually build a first to market non-invasive product to be marketed at lower cost to actually target low income regions in the world as well. Yeah. Yeah, I honestly have no idea what exactly they are getting approved. So what kind of drug and so on. You for sure know all of that. But as said, like, just based on the pattern, if we don't bounce from here, so again, in my experience, that move here indicates that we likely get the next move that breaks us through. But the pattern here would still be valid right now, that this could be wave 1, wave 2, and we go up for wave 3. Yeah, so we'll see probably we'll see with the earnings, to be honest. Yeah, so since it's only like 4 more candles on the weekly chart, if we'll break here and that pattern or part of the pattern becomes invalid, or if we go up from here and with that have a very big wave 1, wave 2, and wave 3. But I would personally, yeah, I know what you mean, like, but the outlook in terms of approval is more relevant. Yeah. But I would personally rather, again, I mean, it's your money, your decisions and whatnot, and it also depends on how big your position already is and how much you could average down and how much you want to throw at it if it were to go below 20, blah, blah, blah. But if it's, so I personally would rather say, okay, whatever I have in there, I mean, I personally have nothing in there right now, yeah, but I just wait. If it goes, I honestly would probably even have my stop loss at the 10 cents and 10.89 cents, because at that point Elliott wave pattern becomes completely invalid, and then what's the point? Although it's locking in like 67% loss in that case, roughly, yeah. But I would rather, based on Elliott wave theory, say, okay, if it goes below 20, do nothing. If it touches 10.89, or maybe if you want to put it a little lower, but technically from Elliott wave theory perspective, that would need to be the stop loss, yeah. And if they deliver something good and there's good movement, so like, and in that case, I probably would, it's going to be hard to decide where exactly. I'd probably, although that's not based on Elliott wave theory, but I probably would consider this trend line here. And if there would be a break of that trend line, then I would enter again, even if it means entering at 70 cents or 80 cents or so, depending on when it happens and so on, yeah. Because if that happens, if we have a solid bounce, actually the real point here would be that high point at 92 cents 40. So that would be the point where I'd rather than throw money in. Yeah, yes, it would only get me a third of the shares. But if this indeed turns into positive development and we start the progress of forming a third wave based on Elliott wave theory, then the profit target for that would be at least here. So we're still talking about like 25 to 65 times payout over the next couple of, yeah, I mean, there we have what, 8 years. So yeah, 8 to 10 years for 25 to 65% times payout. Yeah. Yeah. So yeah, earnings with Elliott, we covered that. It's a non-invasive glucose monitor, for example, like Dexcom G6. Don't know that. Yeah, but yeah, they have sensor issues. They stick in your body. This is RFID. Without a needle, it could be placed into watches. Oh, that's cool. Yeah. So yeah, I mean, that definitely is something that if it works, will get the stock shooting up. But I'm just saying, based on the pattern, I would not add money to it. I mean, again, you do you, and in the end, at the end of the day, I've been, even throughout the few in quotes episodes that you stopped by, I've been wrong often enough, so might be as well wrong here. I'm just saying how I would do it. So if the pattern to me looks like this, then I'd rather say, okay, yeah, like, no point in averaging down here further, because it's then anyway already more likely that we'll break that level as well, where then any pattern becomes invalid that was on the chart so far. So rather instead of trying to get in at or average down at 20 cents, rather than throw it in at wherever we break the channel or safest above the 90 or $1.06. Yeah. So yes, you only get a fifth of the shares, but at this point, as far as Elliott wave theory goes, there would be then a pattern on the chart that would provide a, I don't know, confirmation or whatever you want to call it, yeah. But yeah, I mean, I'm wrong from time to time. So like, and especially one has to say, Elliott wave theory, as great as it is, it applies way more to indices than to individual stocks. So individual stocks need to be very, very popular, like Nvidia, or so in general, the more people trade something like, for example, Bitcoin or gold or so, the more likely you'll be able to label the chart with Elliott wave theory. And if it's some, in quotes, small stock that, yeah, like or penny stocks or so, in quotes, then it's also possible that there is just no valid pattern on the chart. That doesn't mean that it will go down, but it just means that then it could dip here and then shoot up or so. But just based on Elliott wave theory on this chart, my decision would be not to average down further, but only if or when we break at least that trend line channel. I mean, you could make a channel here, but it doesn't make a huge difference. That would be the point where I'd rather get in, yeah, for 50% worse, in quotes. So instead of getting in at 20 cents, get in then at 40 or even at 60 or so, then throw money in when we break that level here. Especially if we look historically, that basically is like a relative or the only in quotes support level that we had back here, here, and here. And so if we break that, yeah. Anyway, best of luck, and I'm looking forward to the super chat of $1.50, no, $3.50. If that happens, yeah, like so. But I mean, to be fair, like I mean, the product would have a lot of future. So if they can deliver it and get it approved, obviously it will not happen overnight. But I don't see an issue then with $25 or even more than that. Yeah. Anyway, so there we spent a lot of time on node and immersion we already covered. I think so. Right now, I have to say for the last week or so, immersion is fairly interesting because it plays nicely based on Elliott Wave Theory and also based on Kennedy channeling technique, which is a simplified version to apply Elliott Wave Theory. I don't chart cryptocurrencies in general, yeah, or anything related with them. So I'm in crypto, but I'm just, yeah, like it just, I don't know, lack the time, or I'm not making the time to chart it. We have some crypto, but that's all kind of like long-term stuff, and it's like mostly from projects that have specific use cases and that are worth 0.0000 something, yeah, and that either establish themselves on the market and will eventually be worth 0 point something or maybe point something, or won't, yeah. But it's mostly a time issue, yeah. So if there wouldn't be other things every day on my to-do list, then I probably would enjoy just watching the market day in, day out and labeling it, but and trading it more actively, and also then across multiple assets. I think Bitcoin and Co are very, very interesting simply because of the 24-hour opening. Yeah, so there is no pause in between, no gaps overnight, and so on. The huge volumes and the volatility, so that if you see a pattern that tells you, okay, there is a big move going to come, you can actually make big profits. Whereas in many, yeah, especially, I mean, in many indexes, yeah, in the Nasdaq, we had a huge couple thousand point drop, okay, but how often does it happen? So usually it's more like a, in quotes, slower movement, but you still cannot use high leverage because even the small corrections in between would wipe you out otherwise. So yeah, but yeah, so circling back, so immersion, I think right now follows a very, very nice Elliott Wave pattern, where on one hand we have this 1, 2, 3, 4. Yeah, there the waves are not aligned, yeah, but basically 1, 2, 3, 4 as a potential diagonal, where that channel here should be. Oh, that's the original. No, that's a different channel here. Okay, like so. A few things on the chart. I have two different possible patterns labeled here. That explains it. Yeah, so on the big scale, it could either be that this is wave 1 and wave 2, and we're currently in the progress of wave 3, which would require a breakout from this channel, which we didn't really have. So we had a short break, but then the retracement here. So there should be the next breakout here that then basically finishes this potential 1, 2, 3, which would take us to at least $15, potentially higher. And then there's the other variant where this is 1, 2, 3, 4, and we're currently in wave 5, in which case, however, we potentially finish the 5th wave already, because then, so that would be not this one. Yeah, subwave, bye-bye. But then we would have wave 2, wave 4, and a parallel through wave 3, and we already see that we break through here. So that would then mean that potentially this 5th wave would terminate here already, and then we would from here downwards actually be correcting the whole thing, which would be very, very bad for my analysis, one has to say. If we have the bigger picture like this, 1, 2, 3, 4, 5, not impossible. The other option is that we have the first 5 waves somehow like this, but it doesn't look that nice, to be honest. So like it's going to be tricky to argue for that. Might be like that, but would need to be a diagonal then. So that's why it complains here, because right now I have an impulsive pattern and it would need to be a 1, 2, 3, 4, 5 diagonal pattern, so leading diagonal. Then we'd have our wave 2. How much do we retrace here? We bounce on the 50% retracement, not perfect, but pretty much. So that kind of would check out. Okay, so let's get rid of that. So that would be wave 1, wave 2. Okay, and if that's wave 1, wave 2, then that would be the other assessment that we have here. That basically we are currently in the third wave. And then in that third wave, we have another base channel. So we say like we have a potential 1, 2, 3, 4. That tracks, so that's going to be close, yeah. So because they're actually mislabeled a little bit here. No, actually that's fine. Never mind. So because we assume that this is basically 1, 2, 3, or not. Let's see what's the low here. Low 654. Did I mislabel that? 655. Yep, we mislabeled. That's annoying. Okay, then that would need to. That just changes. So that goes here. Then just the wave 1 termination point, or what I thought is wave 1. So 0.0, 0.2. So just the base channel changes to this. Then we have basically wave 1, wave 2. And then we have here our wave 1, 2, 3, 4, 5. For wave 3, we break out from this base channel. That one we don't need extended anymore for now. So we break out from the base channel here. We then start our retracement downwards for wave 4. And the wave 4 touches the top of the base channel. And potentially should then from here, so but then that pattern here, so that would be different because wave 3 is like that. So we again bounce exactly then at the 50% retracement level. That still overall stays the same. So while on the bigger picture, there is another variant that might be possible. From the looks of it, right now, if we look just from November last year to now, so almost a year period, it looks like we have a 1, 2, 3, 4, and then wave 5 to come pattern here. And if that already is finished, so if this here is wave 3 and 4 is indeed already finished, then our wave 5 targets would be in the area of 15.25 to 20.44. Which definitely is not too bad. However, compared to immersion, so where again, and we have basically a year, or we have what, November to February, so 4 months for wave 1. Wave 2 could theoretically also terminate here, so like that's doesn't make a huge difference. And then wave 2 for like 2 months or so, and then we have pretty much the whole year, so 8 months till August, or 7 months for wave 3. So, and then August, 1 month for wave 4, a little short, but possible. And then within the next year, theoretically, if that pattern holds up, if we break below the 950, then we are likely looking at a different pattern of 1, 2, 3, 4, 5, A, B, C, and then we get another push, because then we're actually correcting the bigger thing here. And it was like I showed earlier that this here is the end of the first 5 waves. But right now, I think considering that we are on the top of the base channel, we bounce to the 50% retracement level of that potential third wave. I think it's not a bad spot to be in immersion. And so long term, I think it doesn't make a huge difference either way. Although, of course, if we have the different pattern and develop like the different pattern, then first we would see a substantial drop still. But long term, that shouldn't make much of a difference. Now, on the other hand, however, while we have potential 50 to 100% upside here in immersion, if we're right, that's one of the reasons why I like the pattern in Novavax so much more, because the upside is just so much bigger. So, and the pattern seems to be, in quotes, clearer. We bounce here at the, we don't bounce. We barely, how much are we away? 29, 27. Yeah, so we're a little bit away. So we fall a little bit short of the 338.2 extension level for a wave 3 target area. However, we still have a nice, visibly with the naked eye, 1, 2, 3, 4, 5 pattern in here for the third wave. We have a clear breakout from the base channel for that. We have a clear retracement here. We have a with the naked eye visible potential ABC pattern here. That also, let's bring another channel back. So the base channel here. So 0, there. Yeah, that almost touches the top of the base channel. So kind of okay. Like, I mean, it doesn't always happen, but reasonably often we touch the top of the base channel. And we're very close to, in quotes, getting a confirmation. So if we manage to break out from this trend line or deceleration channel or line, then we would have, based on Kennedy channeling technique, our confirmation that we are most likely in a fifth wave. And the fifth wave target in that case, as said, would be here at least, and potentially here. So for what's that, like 300%, 200% here, and 500% up here. Yeah, doing math in the head is always tricky. Unfortunately, I mean, we only have one call option that actually should be slightly in the money. Yeah? So we see the call is slightly in the money. If I'm right, it's going to pay off nicely, but I mean, in absolute dollars, still not really life-changing, considering that we only invested $93 or have $94 risk here. If I'm wrong, we lose $94. If I'm right, it's going to be a payout of, I don't know, $800 or so, which is not a fortune, but still definitely not bad. And yeah, what else do we have? So SunPower, same as always, or not same as always, like sad story since here, so no valid pattern on the chart. Even auto-labeling is confused now, yeah. Yeah, either they go bust or that thing, or they eventually have positive news. Green wave, same thing. So those are two things where definitely was wrong. Although in both cases it was about spotting a pattern that might end the downward trend and just didn't. So could have been worse. And what else do we have? How do we have CrowdStrike? How are they doing? So we're still in the upward recovery pattern here. Actually, a decent recovery from here, one has to say. Yeah? So like, but I don't know. Like with the naked eye, I see 1, 2, 3, 4, 5 down here. So I would expect A, B, C in some form, and then the next 5 wave push down. That would not be as dramatic as this one, but more like a slower, slower played out, or played out slower. But only time will tell. And I think with that, we've covered our usual suspect. I think COS was missing. Yeah, so COS. Oh yeah, there it looks like we actually finished on the minimum target for wave C. We have a, if we zoom in a little bit, so there we might now be actually in our potential fifth wave. Auto labeling says we already have 5 waves finished. Okay, let's get rid of the auto waves for now. So I think we might be in the fifth wave here. So here we have wave 4, and wave C reaches the minimum target. And at the same time, wave C bounces on the 61.8 retracement, and which would give us a potential profit target for fifth wave at 17.44 to 32. So, and if we use Kennedy channeling technique here, although we're looking at a diagonal in that case, so that again has to be a diagonal pattern. But if we use Kennedy channeling technique, so here, here, and here, then our profit targets would be the median or the top of this channel. So I guess either somewhere here-ish, so in the next week or so, huge upward movement possible. I mean, not saying likely, or somewhere then later. But on first glance, it looks like we actually finished our corrective wave here. If we use Kennedy channeling technique and we take the deceleration trend line, whatever, then we can actually, yeah, like, wrong direction. Okay, it's going to be a little tricky. Okay, the deceleration trend line is a little tricky because we would have to put it like this. So there we're still waiting for a breakout from here as absolute confirmation. But even the last couple of days, that's actually a decent movement that we had here for the last couple of days. So, and overall, if we draw a more general guideline, it looks like we already have a breakout. So, but that will be in quotes the confirmation. If we break this, then we should go to at least the 1744 or more likely then a little bit higher with potentially reaching the $32 mark. Yeah, remains to be seen. And I think with that, we can call it a day. Yeah, like, and just see how things play out. The one thing left would be to check if we can actually sell some calls. But even the $1, I mean, we can sell the $1 covered calls, but I mean, there's no premium behind. Oh, there's actually $180. So we can sell 2 mid. Is there volume buying that at that price? So huh? Oh, no. Bad idea. Yeah. So obviously they had another reverse split, so that would have been, so now we have 5 shares instead of like having 200. Yeah. That would have been a risky move right now to sell those. It's also the reason why I could buy back the other one so easily, yeah, because obviously with the reverse split there is no volume anymore for the old calls. That's why it was FFIE free basket, yeah. Yeah, at this price, I'm not going to stock up on them. I'm definitely not. Yeah. Hi, Akashi. Great for you to stop by, or nice of you to stop by. I hope you're having a great day. But yeah, then there we cannot sell a call against. Yeah, good that I somehow last minute spotted that, because that would have been tempting to sell. And yeah, cost, there are no options. Green wave, there are no options, and somehow there's not enough premium considering our average, unless we go very maybe it's worth. So like, if is there even a volume? No, there doesn't seem to be, but there's no price at least. Yeah, so yeah, like nothing to write here. Okay, yeah, then that's pretty much it. So gonna see how things play out. Again, I mean, there are some things where we just have to wait and see if eventually they move in the right direction or not. So Faraday Future, SunPower, Green Wave. There are other things where I'm really confident that things will play out like that, like Novavax and COS. COS shows very much potential right now. Immersion is like, I don't know, 50-50 spot. So the crucial mark here would be 950. If we break that, then it's bad. If we stay above that, it's good. COS could run on first day based on theory. I think we first would need to get, so I mean, we're now on a daily chart, but we first would need to, you see here, naked eye, wave 1, wave 2. That would be, by the way, one of the situations where we also retraced 90% and didn't break through. So yeah. But we're likely here then, so that would need to be the end of the correction, and then this would need to be wave 1, 2, and wave 3. And then in this third wave, we would need to have wave 1, 2, and then that's wave 3 in progress. But as for running, if we take an extension here, then we see we bounced pretty much exactly on the 361.8 extension level. So likely we finish this 1, 2, 3. Now getting wave 4 and then wave 5, and that wave 5 should take us, let's take another one, should take us to at least 1017. So that would be the 2618 level, but then we would get another wave 4 corrective pattern. So although already probably higher, because if that's wave 1, 2, 3, now we get wave 4, or 4 might already be finished in that candle. I mean, we're looking at a very specific time frame here. Then we get a wave 5. Wave 5 might already break that. So I would say the third wave, 1, 2, 3, would be at the $11 to $12 mark here. Then we get another wave 4, and then we get another wave 5. So in between, there should be another, what is that? Like at least $1 corrective movement, potentially a little bit more. So first day would, by the way, be tomorrow. So, and no, what? Today is Wednesday or not? Today's Tuesday. Well, then I'm wrong. Yeah. So then in 2 days. Okay, that might be. So if today we how long did that take? So 5th of August, that is all 5th till 12th. So there was a weekend in between 5th, 6th, 7th, 8th, 9th, 10th. Yeah. So there's like more than a weekend, of course, between the 5th and the 12th. And then here we have from the 12th to the now 20th. And we're not finished yet. So yeah, I don't think so. Cost could run on Thursday, maybe a little bit earlier to attract sellers, but a real sharp move is expected for Thursday. Or I mean like ridiculously high numbers, like $20 squeeze type of price. Yeah, I mean, not that it's not possible. One never knows, but I'd be surprised. So like based on like here we have a visually with the naked eye recognizable pattern, and here 1, 2, 3, 4. So again, 4 in progress, or maybe finished here, or yeah, I mean, should still be a little bit more. So I mean, we see this is the potential wave 2. So that 4th wave here should also play out till that actually would be till Thursday. So if we look based on candles, so then we would already be almost in Thursday, and then Thursday would be 5th wave. And that finishes only this 3rd wave, but that could go like, I mean, could go here, could go higher. I think it will go up. So like based on the pattern, I think it will go up, but I'm just expecting, like I said, like the correction here for a 4th wave. Then we finish this one to finish this 3rd wave, and then so like till here potentially 11 to 12, and then we get another 4th wave, and then we get the 5th wave that pushes us through here. And the highest target here would be, as said, or the target for a 5th wave, if my labeling is correct, would be 17 to 32. And for that, however, we would need to see the whole thing play out. 1, 2, 3, somewhere, wherever it goes on this ladder, 4, and then 5. Yeah, so 20-ish on Thursday, I think is, yeah, like based on the pattern, I don't expect it, but I think it will go up. So even if it takes longer in a couple of weeks or a couple of months, I think it's still, yeah, like there is potential there. Anyway, with that, we're going to call it a day so I can take care of a few other things. Olga, Akashi, thanks for stopping by. Anybody who lurked, also thanks for stopping by. I hope you were able to take something away from the stream. I wish you all success in your trading and the rest of your life, in quotes, or everything else you do. Yeah. And then see you all potentially tomorrow at 5 minutes roughly before market opens for another episode of Daily Market Mastery. Till then.